Hello everybody, Viewstan here. I hope you guys are having a great day or a great night. And so as you guys saw, I had a problem yesterday and I lost connection. And so I had to delete the video because it only had 3 minutes. And so this is my second attempt, okay? And before jumping into the charts, don't forget to smash the like button, share with your friends and subscribe as well. And let's go. Okay, so you guys know the drill. First, I'm going to use this chart right here, which we have all the data, and then we will jump into the one for the later action, okay? So first things first, just a second. Let's draw the key levels for a better reading on the bigger picture, which is what matters at first. So folks, this structure right here, it's complete, okay, 100% complete. And why we know this line right here, just a second. Okay, so oops, hold on. Okay, so this line right here represents the lowest point for the correction, which means all the correction after the pop, okay, to the new all-time highs. And as you guys already saw, I measured it before. Just a second. So we had a 90, 80, 51% decline, which is it's in the range for healthy retractions after like very aggressive moves up. Okay, so as you guys remember, we already saw this in the past. I have a figure here. Oh, here it is. Just a second, I'm going to show you. Hold on. Okay, so as you guys can see, Amazon was very similar back in the day, 9087, Cisco 86.5. The range for Cisco, it's aligned with Kava Labs, which I made a video maybe 2 or 3 days ago. We had some that was very aggressive, like 90, but never 100%. Okay, 100% is all the way bad, but coming close is not bad at all. Okay, Yahoo 96.4, price line, I don't know if they are still in the business, 99.4, Nortel.7, Lucent 9083, very close as well. So as you guys can see, this percentage decline that they showed back in the day, it's somewhat a way to scare people, to scare the average Joe. So the average Joe will stay out of the business while the smart money buy everything they can. That's the game. That's how it works. And so as you guys can see here, we had the same move. Just a second. Let's bring another line here. Again, sorry. Just a second. So from this guy here to this guy here, we are measuring the retraction before the expansion. That's how it works. And again, this is I'm presuming the project is healthy. They have a product, they are going to grow, they won't have any problems with regulations. I'm not going to be the judge here, okay? I'm not going to make judgments. I only looking at the numbers. That's what's matter for me. And so here, this move here, from the bottom to the top, it's complete here, okay? It's done. Not the chances to coming back to this level are around maybe 1%, okay? Very low, very. Scenario that I expect is something above this level here. okay, which can be here, can be here, or can be here, okay, but that's not what's important now. So just a second. Yeah, I won't be able to use my Fibonacci setup, but let me see here. So for this setup for Fibonacci, let me draw the 50 because it's the only one that will matters here. Yeah, so more or less close, accurate, not 100% accurate, but yeah. So this range here, it's a whole structure, okay? I mean whole, 100% in the way back and 100% in the way forward. Because here we had the beginning and here we had the end. It's a complete cycle. I don't like to use this word, but for you guys to understand. So it's a complete lifespan, okay? And all this way back, it's for A to B, it's complete, it's over, it's done. Now we are looking for the next scenario. So just a second. So the one we are looking right now, oh, hold on. Yeah, let me take this one out. Let me see if I can properly explain to you. Okay, so this is the axis. Okay, as you guys can see, for the beginning, the end, and the whole structure. We can address this one here as well. So for the whole, it's complete, it's done, it's over. And this is not a trend line, okay? I don't use such lines, but just for you guys to have an idea how Fibonacci is going to be placed here, because I can do it in the moves behind, because Fibonacci will broke. I can use my tools here, but I'm going to show you in the other chart, okay? So basically what we were looking for is this. What we are looking right now, which is all the correction that we had, that I just showed you, as you guys can see. And this is the new beginning, okay? And how do we look at it? Because again, this guy here, it's just a second, let me show you the number. Okay, so as you guys, doesn't matter the Fibonacci is broken, okay? Just want to show you the level. It's from the 100 to 0, okay? Which give us the range for retraction. That's how we read and use Fibonacci properly. And so here, for our new cycle, or the next bigger, the whole pattern, I mean, sorry. This is the proper setup, okay? Because one, for the beginning, we went from 1 cent to 120, and then our half pullback. So from 100 to 0 to measure the retraction. And now that the whole move is complete, what we are going to measure, it's the way up, okay? Because that's the natural move for the market. And this is not only about Cardano, okay? It's about everything. And so let me, okay, nothing to see here. Yeah, so let's keep going from here. I think it's better to use the weekly chart. Just a second. Yeah, I'm taking out this line just for a second. Let me put this closer. Okay, so that's what we need to look at. So this line is here for 80 cents and 12 cents are the midway for the whole, okay? from left to the right, from the beginning to the end. That's the key levels for now. And what Cardano needs, so for it to properly call for a bull trend. Okay, it's not in a bearish trend. As you guys saw, we already left the correction before. Well, it's past, it's over. But what we needed in a bull market, after the whole cycle phases, is this. We need a higher high compared with the previous one, which is above the midway. Okay, and then we will start to look for, just a second, something like this, or even something like this, or something like this. Because for the next phase, what we need is higher highs and higher lows. That's what is going to give us 100% technical evidence that we are not going back again. And by going back, I'm not saying we are going back to these levels. No. I'm saying it's how much back we will go. Okay, just for a better reference here, we have two key levels in between. Just 1 second. What you are seeing here, you are not going to see anywhere else. It's one of my trading setups. This one I use for trading setup. I have like 3 if yes, oops, is my line. Yeah, so yes, just change the color, just a second. Hold on, hold your heads, cool your jets. Yes, that's it. So as you guys can see, this range right here is very important, not only the way up but also in the way down. And I highlighted yesterday in the other video. So okay, let's go. This candle right here, it's an engulfing candle, 100%, almost 100% shadow, which some people call a dark cloud. And so far we are still trading below a key level, that is 80 cents. Okay, and this candle appears to be bullish. Okay, but the problem is, are we going to have bullish follow through? That's the main question, because in order to say, well, we are going up from here and this is it, it's moon, we have to presume more money will keep coming. And we know the smart money doesn't buy or long resistance levels, but instead they do it on resistance support levels. When I say support and resistance, if you are not familiar with my method, I don't look at such levels, resistance and support levels. I use this word so you guys can understand my methodology. Okay, I don't look to the left, I only look to the right. That's what matters for me. I have a very different approach from the other folks. So again, we are still trading below key level, and even if we close above, we will be still trading inside rejection below two main resistance levels, and also below a very strong level. And so as you guys can see, all this range, just a second. So all the not here, this was the bullish territory back in the day, and so after this day here, from now, this is the bears territory. Okay, so that's their house, that's their bunker, that's their place, and presuming we are going to go up from here, we are also presuming we are going to beat all the bears out there, okay? Which I don't think it's going to happen, at least not for now. But yes, yeah, it's possible. The scenario that I'm looking for is this one. We can give up to the bears here, doesn't matter where, okay, but around this level. And then we go make a tactical retreat. Can be at 004, which would be great, 004. Folks are always saying that they want to buy the dip, but they don't want to see the dip. Let the dip comes, okay? Just wait, hold your heads. And even if we go to 2 cents, in my opinion, is still 100% bullish, because this will be our higher low. It is also true that even if we go only here, and this is it, it's still another higher low. Okay, and from here, doesn't matter where it's going to be the next higher low. There are multiple ways to leave this the bearish territory. One of the ways is by printing a bearish continuation setup. I mean, a bullish setup with a fingerprint of a bearish setup, which is going to end up in a bear trap, which would be something like this. Again, these are next key level and multiple key levels ahead. So it doesn't matter if you go to here, or from here, or even a little move down here. So the idea is this, is to print a bullish continuation setup, and the bears will keep shorting all this level because it's easy money. They will keep shorting, bang, bang, bang. And in the last leg, their shorts are going to be wiped out because the bulls will come in force. And all the shorts will feel the fire for this move up. And so by this way, it will be more easy, less expensive. The bulls will have more time and more money to accumulate one last time before the bull break, okay? And again, another thing, I'm not saying the bull break from here doesn't matter how it's going to happen. It's going to be a move like this, okay? That's not what I'm saying. I'm not calling for specific levels. No, I'm just trying to figure out, sort out the possibilities of X, Y, or Z scenario. And because if we end up with another move like this one straight up, even making a new high, is going to be 100% bearish, because we are going to have another boring move down before cooling off. Okay, so the bulls are aware of this. They know the smart money is playing beautifully, in my opinion. And yeah, so about possible targets, again, this is not financial advice, you guys know the drill, okay? I'm sharing just my opinion of this. And so I don't believe this level here is going to hold, presuming we are going to see a small last leg down, because it's too close. And always the first ones, they don't hold. It's not enough for a proper correction. So in my humble opinion, I will be looking for 4 cents, which is all the way healthy, in my humble opinion, okay? And then the magic will happen, because we are going to set up on the weekly and on the monthly our next pivot, okay? Because we need one. We can't keep going up like this, because the bears have to step in and do their move before we can continue. Otherwise, it's just the same as we had back in the day. Just a second, please. Okay, let's go. Second. Yeah. So now let's take a closer look on the lower time frames. So again, this is a bullish candle, but again, remember, this candle is a trigger for buying orders, the late bulls, okay? People who let the buying orders here, and then price drop and it went straight up following the dormant orders, which is not 100% bullish, okay? It doesn't mean it's going to have follow through. So this kind of candles can be a bull trap. And as you guys saw here, can see here, we already end up rejected from this level again. So we made our way up above 8 and then rejected again and trading below. This is bearish, this is not bullish, okay? Let's take a closer look for one day. So the late bulls are looking for continuation here. Okay, they still want another move up, but in my humble opinion, it's going to short live around 9 cents or even 12. Okay, they already made their point. Okay, they are in control. In my humble opinion, it's not necessary to spend a lot of momentum, time, and money to make another run here. Okay, I also believe such a move can trigger the FOMO folks and the late bulls, and they are going to buy, and then the whales will jump in and sell on top of their heads. Okay, that's what I believe is going to probably maybe can happen. Okay, let's take a look on 4 hours. Okay, let me see. Let me take out this Fibonacci here. So as you guys can see, we are still trading inside this range, but there are more things here to see. Hold your hats, cool your jets. Just 1 second. Let me use a dotted line here for both. Okay, so as you guys can see here, we end up rejected on the 50% here, and also all the way, to be honest, yes, all the way rejected, which is bearish. Okay, so here we have bears in control, and for this range right here, as you guys can see, we had buyers, the support and resistance folks, and again without follow through. Okay, no follow through. Then they tried again, they went smashed here, because it's very dangerous to play this game. Okay, support and resistance trade is very dangerous. And then we had this one here following Bitcoin. Don't take my word for it, check on your chart. And here we had this small follow through again following Bitcoin behavior. But the problem is we still have lower highs, which is a big problem. Okay, so again, for this whole range, bears are in control, and for this range right here, we don't have bulls with enough firepower to do their move. Okay, we have only folks trying the easy money, which is buy support and sell resistance. That's what they are doing. So they are only helping the bears. That's what they are doing. They are giving more firepower to the bears because they are taking their profits on the bears territory. And I believe we have a possible prime bearish setup here. Let me see. Yeah, somewhat yes, but it's not 100% clear. It's going to be clear soon. If we keep continuing with lower highs, we will end up with a bear break. Okay, that can be the scenario we are looking for. That's very, very close, it's not far away, which is right here, the 4 cents range. So as you guys can see, it's not a big move, not a big deal, but yeah, it would be great for us. And also let me see here. No, it was so for the 4 cents range is not a straight outcome for a bearish structure here, which give me the following idea. We can end up with this, which probably is this can be the first target for a bearish bear break, and the second target, then the second target separate on our 4 cents range. Okay, so it would be like a two-step bear break or something like this, doesn't matter, and then that's our move, the level we were waiting for. Okay, so guys, I think this is it for Cardano. We will keep watching, and yeah, let me take a quick look here to see if there's anyone in the chat. Just 1 second. XRP Bags, hello my friend. Future Boy, hello bro. Smash the like, friends, yes. Prashant, Sengar, hello bro, hello my friend. Joshua, I'm still awaiting the last train. Yeah, we are in the last train. It's a event, it's a time frame of things. John Ripple, hello my friend. Guys, thanks for your support, thanks for your, oh, there's a lot of people here. Thanks, you're very welcome, No Way. Thank you very much, with work, thank you, you guys are welcome. Carl, thank you. Guys, thanks again, thanks for your time, thanks for your patience, thanks for your support. Don't forget to blast the like button. And so for now, this is it. We will keep watching. I'm trying to follow everything, okay? And Idai, Bloke, good morning from Perth. Good morning, my friend. As always, thanks for your knowledge and stay safe. Thank you, Myers. Vizar, keep it up. I really like your content. I'm glad to know, Vizar. So you guys are welcome. Thanks again. Smash the like button, and I will see you guys soon. I'll try to put another update today, okay? Thank you. See ya.